It is 2 in the morning. The cat is on the kitchen counter. You are on the floor, cross-legged, with a stack of paper you have not looked at since the day you signed it. Somewhere on page 9 there is a sentence. That just cost you $3,200. You paid $62 a month for this. For 23 months, that is $1,426. The word on the front of the policy is comprehensive. The word on the denial letter is pre-existing. And the thing is, you did everything, right? You bought the policy before anything went wrong. You chose the plan that covered illness. You picked the company with the good reviews. You were the responsible one. That is what makes this specific kind of quiet so heavy. There is a blueprint to how insurance is supposed to work. You have seen it in your own life with your own health coverage. The building has rooms, emergency services, prescriptions, mental health, preventive care. 10 rooms, actually. The Affordable Care Act requires every plan sold on the marketplace to include all 10. They call them essential health benefits. And since January of 2014, no insurer in the United States can deny you coverage because of a pre-existing condition. That is federal law. Your cat's insurance has no such law. There is no pet equivalent of the ACA. No mandated list of what must be covered. No federal rule that says a pre-existing condition has to be included. The company that sold you the policy got to decide what comprehensive means. And what it decided is that comprehensive does not include the thing that actually went wrong. I have been turning this number over in my head for 3 days. Not the 3,200, the other number. The gap between what the word comprehensive means to the person buying the policy and what it means to the company writing it. Let me walk you backward through this, because the denial letter is the end. The interesting part is what you were never shown at the beginning. That sentence just sits there. In 2019, the average accident and illness premium for a dog in the United States was $585 a year. By 2024, that number was $749. That is a 28% increase in 5 years. According to the North American Pet Health Insurance Association's State of the Industry report, for cats, the increase was smaller, about 10%, from $350 to $386 a year. The industry collected $4.7 billion in gross written premiums in 2024 alone. That is more than double what it collected in 2020. The market is growing at 21% a year. 6.4 million pets in the US are now insured. That sounds like a lot until you see the other number, the penetration rate. 3.9%. Out of 163.6 million pets in this country, 3.9% have insurance. For cats, it is 2%. Your health insurance covers 92% of Americans. Your cat's insurance covers 2% of cats. And somehow, the cat's insurance is the one with more exclusions. I should mention, this is public information, not personal guidance. Your life has details I will never know. I am not a licensed insurance agent or broker, but the numbers are worth hearing because what they reveal is not a flaw in one policy. It is a structural feature of the entire product category. Here is what a standard pet insurance policy does not cover. Pre-existing conditions, dental disease, wellness, visits, routine vaccinations, congenital conditions, hereditary disorders, on most plans, grooming, behavioral therapy, usually. Some plans will not cover cruciate ligament problems. If they happen during the waiting period, some will not cover bilateral conditions. If one side was affected before the policy started, now here is the part that is easy to miss. When they say pre-existing, they do not mean you lied on the application. They mean any condition that was noted, observed, or showed symptoms before coverage began. Your vet wrote down that your cat had crystals in the urine 2 years ago. You did not think about it. The insurance company's underwriting team did. And when your cat blocked, they traced it back. The denial is not a mistake. It is the system functioning as designed. Think about what happened with human health insurance. Before 2014, insurers in the individual market could refuse to cover you for a pre-existing condition. They could charge you more. They could exclude entire categories of care. The AKA changed that. It created a floor, 10 essential health benefits. No pre-existing condition exclusions. No annual or lifetime dollar caps on essential benefits. Pet insurance in 2026 operates the way human insurance operated in 2013. There is no floor. There is no mandated benefit. The company decides what the building looks like. And some of the rooms that feel like they should be there, the ones you assume are there because the brochure says comprehensive, those rooms were never built. Someone reads that and closes the laptop. A veterinary tech in Raleigh making $54,000 a year, 29 years old, has an Angora cat, white, long coat, 3 years old. This person did the research, compared 4 providers, chose the one with the highest rated customer satisfaction, pays $38 a month. The policy covers accidents and illness. It does not cover dental. It does not cover wellness. It does not cover hereditary conditions. The cat develops hypertrophic cardiomyopathy, HCM. It is the most common heart disease in cats. It is also, in many breeds, hereditary. The claim is denied. This person did not make a mistake. This person made a reasonable decision based on the information that was presented. The information that was not presented is the part that matters. And this is where it tilts. Because while this market has no regulatory floor, it does have a very active ceiling of consolidation. A single private equity conglomerate, JAB Holding Company, now controls more than 20 pet insurance brands across North America. Pet's Best Spot, Pumpkin, Embrace as PCA Pet Insurance. That is not a competitive marketplace. That is a portfolio. But here is the part that should genuinely unsettle you. The premiums are climbing, 28% for dogs in 5 years. The number of insured pets is climbing, 12.7% growth year over year. And at the same time, vet visits are falling, down 3.5% in 2022, down 1.4% in 2023, down 2.6% in 2024, down another 3.1% in 2025. According to VetSource data, the product is getting more expensive, more people are buying it, and fewer people are going to the vet. That pattern does not describe a product that is lowering barriers to care. It describes a product that is absorbing money. Meanwhile, the financing layer underneath the insurance layer has its own structure. CareCredit, the most widely accepted veterinary financing card, offers what it calls promotional financing, deferred interest. The standard APR after the promotional period is about 33%. You sign up for it at 2 a.m. in a veterinary emergency room. Because your cat is on a metal table and you would sign anything, the interest does not start the day you miss a payment. It retroactively applies to the full original balance from the day of purchase. Your own emergency room cannot do that. Your own hospital offers payment plans, sometimes at 0%. Negotiated through billing departments and financial assistance programs that are required to exist under federal law. Your cat's emergency room offers a credit card with a retroactive interest trigger around 33%. The gap is not between what you can afford and what you cannot. The gap is between two systems. One of them was reformed, one of them was not. Nobody is adding up these numbers out loud. The second most common medical condition claimed for cats in North America, according to the 2025 NAFIA Street 8 of the industry report, is urinary tract and kidney conditions. The very thing your policy excluded. The very thing that is statistically most likely to happen. After gastrointestinal issues, treatment for a urinary blockage in a cat runs between $750 and $1,500 for stabilization. If surgery is required, $3,000 to $4,500. These are not rare events. These are the events, and the policy that calls itself comprehensive does not cover the condition. That is second on the list of most commonly claimed conditions. That is not an oversight. That is a business model. I want to be clear. Pet insurance can work. There are policies that pay out. There are situations where coverage prevents financial catastrophe. The top cat claim paid in 2024, according to NAFIA data, was $99,416 for a 7-year-old domestic shorthair with a lung condition in Sugar Land, Texas. That is a real payout for a real cat. But the structure that allows that payout also allows the denial. Because there is no floor, no one is required to cover anything. And the word comprehensive in pet insurance is a marketing term. It is not a regulatory category. In human insurance, when a plan says it covers essential health benefits, that phrase has a legal definition backed by federal statute. In pet insurance, when a plan says comprehensive, that word means whatever the company's policy language says it means. Page 9, paragraph 4, subclause B. In 2014, human health insurance was restructured around a simple idea. The insurer does not get to decide what counts as essential. A public standard does. No equivalent restructuring has occurred for pet insurance. No legislation has been introduced. No federal agency oversees the product category the way state insurance commissioners oversee individual health plans under ACA guidelines. The blueprint has no architect except the company selling it, and the rooms that are missing are the ones you only notice when you need them. The vet tech in Raleigh is still paying off the $38 a month. The cat is recovering. The bill was $3,200. Paid on a credit card at an interest rate this person has not yet checked, somewhere between the policy brochure and the denial letter. There is a version of this story that everyone in the industry knows, and nobody puts on the landing page. Bank of America Institute data shows pet services prices have increased 42% since 2019. According to Bureau of Labor Statistics consumer price data, veterinary care is the largest component of that increase. The insurance product that is supposed to cushion that increase has itself increased 28%, and the coverage it provides has not expanded to match. 3.9% penetration, 92% for humans. 2 systems, one was given a floor, one was not. A white Angora cat on a kitchen counter at 2 in the morning. Long coat catching the light from the phone screen. The person on the floor is reading page 9 for the 3rd time. The policy says comprehensive. The cat does not know what that word means. Neither, it turns out, did the person who bought it.